Hello and welcome to this webinar where we'll be giving you an overview of the new service available for obliged entities to report a PSC discrepancy. Now, my name is Gary Townley and I'm part of the communications team here at Companies House. So in today's webinar, we'll be giving you the background to 5MLD as it applies to Companies House, an overview of people with significant control and the PSC register, before focusing on the PSC's discrepancies and when and how to report them. And then we'll provide you with a detailed guide of how to use our new online service for reporting PSC discrepancies. In addition to me, there is a team of Companies House experts in the background waiting for your questions. So if you have any questions about people with significant control or reporting discrepancies and the new service, then this is your opportunity to get first-hand advice from the experts. Now, please bear in mind that we can only answer general questions and we can't go into specific details on specific cases. Now, Companies House, obviously you probably know, is the registry for limited companies in the UK. We are an executive agency sponsored by BEIS, the Department for Business, Energy and Industrial Strategy. We register and we dissolve limited companies. We collect company data and we make that data available to the public, driving confidence in the UK economy. We have 4 offices all around the UK, London, Edinburgh, Belfast and Cardiff, but most of our customers deal with us electronically, online, as it's quicker, cheaper and leads to less rejections. Now, anybody can access the company register online, and that's from their PC, laptop, or from a smartphone, and that's all free of charge. So just to recap today's agenda for those who have just joined, we're going to look at today a quick overview of 5MLD as it applies to Companies House. What is a person of significant control and the PSC register? We'll also guide you through the new discrepancy reporting service, how to access it, and the information you'll be required to use it. So, the 5th Money Laundering Directive, or 5MLD for short, is a European directive, European Union directive, designed to prevent the use of a financial system for the purpose of money laundering or terrorist financing. The directive was implemented on the 10th of January 2020, and anyone who carries out regulated work needs to understand the impact of these changes on their anti-money laundering compliance requirements. Now, historically, the government has always been committed to making the UK a great place to do business, with trust and transparency at the forefront. So following on from the G8 summit, which took place in 2013, we introduced the first public beneficial ownership register in 2016 as part of the Small Business Enterprise and Employment Act. We made some changes then in 2017. We had the Financial Action Task Force FATF on-site visit and experience in 2018. And then most recently, last year, we introduced discrepancy reporting so that obliged entities such as banks and other AML regulated firms now have a legal responsibility to highlight where they see differences on the public register around beneficial ownership information. As the financial landscape evolves, new channels and new financial products open up, new opportunities for businesses and consumers, but also for financial criminals. As such, the FATF task force has provided further guidance in a number of areas to tighten money laundering regulations and terrorist financing. The UK and EU member states began integrating 5MLD into individual country regulations from January 2020. The PSC register. Under 4MLD, member states were required to establish or maintain a central register of beneficial owner information on registered corporate or other legal entities that identified persons of significant control. In 2016, the introduction of a PSC register in the UK was part of the government's plans to improve transparency in the ownership and control of companies. The establishment of a central register of company beneficial ownership allows those who really benefit financially from a company to be more readily identified, in contrast to those who hold the legal title to the company's shares. The amended regulations now require discrepancies relating to a beneficial owner information found in the course of conducting due diligence to be reported. Obliged entities. The AML regulations require obliged entities to inform Companies House if there is a discrepancy, which we will go into in more detail in just a moment, but firstly, we'll cover who or what is an obliged entity. Currently, obliged entity refers to a specific financial institution and business, which are credit institutions, financial institutions and money laundering service or money service businesses, financial and legal entities, auditors, accountants, tax advisors, notaries, independent legal professionals, trust and company service providers, gambling service providers, and individuals who conduct cash transactions exceeding €10,000. Fiat to crypto exchanges and custodian wallet providers, art dealers and real estate agents acting as transaction intermediaries where the combined value is over €10,000. And you can find all that information on our website. People with significant control. Who or what is a PSC? A PSC is anyone in the company who meets one or more of the conditions listed in the People with Significant Control Regulations 2016. A company can have more than one PSC. A PSC is a person who holds directly or indirectly more than 25% of the shares, holds directly or indirectly more than 25% of the voting rights, holds the right directly or indirectly to appoint or remove the majority of directors, otherwise has the right to exercise or actually exercises significant influence or control over the company, or has the right to exercise or actually exercises significant influence or control over the activities of a trust or firm which is not a legal person, the trustees or members of which would satisfy any of the four conditions above. Recording your PSC information. Once a company identifies their PSC, they need to record the details in their own PSC register and inform us. PSCs are sometimes called beneficial owners, but they do have different legal definitions. The requirement to report discrepancies is based on the Companies Act definition of a PSC, not the money laundering regulations definition. This means that the information on the PSC register might be different to other beneficial ownership information, but it might not be inaccurate. So what is a PSC discrepancy? A discrepancy exists when a relevant entity has information that clearly indicates that the PSC information recorded by Companies House is inaccurate. This could include a discrepancy in the PSC's nature of control, their name or their month and year of birth. It could be their nationality, country of residence, correspondence address, or notified date. Our focus, however, is on factual errors, such as a missing PSC or an incorrect correspondence address, not typing mistakes. It is not a discrepancy when the entity holds information that we do not include on the PSC register. A spelling error, for example, John Smith without the letter H instead of John Smith with the letter H, or a missing or slightly different spelling of the middle name would not be a discrepancy. Obliged entities can advise the company to contact us to correct these minor errors. The address shown for a PSC on the Companies House records is a service address. This does not have to be their home address. Obliged entities should take this into consideration. PSCs must provide their home address to Companies House, but this is kept on a private register, which is only available on request to credit reference agencies and specified public authorities. As the PSC's home address is not available, on the public register, it might not be a discrepancy if it does not match the address given to an obliged entity. If the address a client has provided is different to what is shown on the register, the obliged entity may wish to check with them if they have used an alternative to their home address as a service address. A report should only be made where there is a clear discrepancy between the same type of addresses. When to report a discrepancy. Obliged entities must make a report if they find a discrepancy when setting up a new business relationship with a customer. You should report a discrepancy as soon as possible. To report a discrepancy, you will need the company number of the entity being reported as having a discrepancy, the type of discrepancy, the information on the PSC register you believe is incorrect, for example, an incorrect address or an error in the nature of control. You'll need the correct information you believe as it should be shown on the register, and any other relevant information about the discrepancy that supports the report. Using the new online service. It will take around 10 minutes to complete a discrepancy report, but make sure you have all the information to hand, as the service will time out after 30 minutes and the information will not be saved. Finding the online service. Using your search engine, search for gov.uk, which is the main portal to find government services information, or you can just type www.gov.uk into the address box at the top of the page. Once the page is opened, you will see that you have access to a range of topics from driving and transport to visas and immigration, and scrolling down the page, you will find a topic, guidance and regulation. Or you can simply type enter the term PSC into the search box and select search. Report a discrepancy about a beneficial owner. You'll then find yourself provided with a list of the most relevant topics relating to PSCs, and within the list you will find the report a discrepancy about a beneficial owner on the PSC register, and that's the service that you are looking for. Once you're on the page, you'll have access to all the information you need to know about the 5 MOD obliged entities, PSC and discrepancies. As you scroll down the page, you can find more about information on each of the subjects, and halfway down you'll find the make a discrepancy report green button, which is where you can start the process. Once you have selected the Start Now, you will be presented with a list of obliged entities from which you can choose the type of entity that you are. If you are not an obliged entity, you will not need to use this service to report a PSC discrepancy, but if you want to update your PSC details, you can do so by letting us know about changes to your PSC details in the normal way, and there's a link on this page to take you to the correct screen. After selecting your type of obliged entity, you will be asked for the name of your organisation. You will then be asked for your email address in case we need to contact you for further information, and you will then be asked the company number for the PSC with the discrepancy. Once you have completed all this information, you'll be presented with a confirmation screen where you can check that the company details you have provided are correct. If they are correct, select Continue. If they are not correct, then you can go back and change the company details. If the company details are correct, the next screen will allow you to select the discrepancies that relate to the PSC in question, and you can select one or more options that may be relevant to you. So it could be that the name is incorrect, or it could be that the name and the date of birth is incorrect, and you just select the rows which may be applying to you. So once you've selected all the things that you choose to be incorrect, you will then be asked to check to make sure the information that you have submitted is correct. So it might just be worth checking each detail before you submit the report to us, and it's still possible to go back and make changes if any of those is incorrect. On the last screen then, you'll be asked to provide specific information about the discrepancy, including what information on the PSC register is incorrect, the correct information you believe that should be shown on the register, and any other relevant information about the discrepancy that supports your report. Now, if this free text box is left empty, it will return an error message and you won't be able to complete the report. So you do have to provide information in that box. So that brings us around to the end of the presentation. And I can see we've had quite a few very interesting questions coming through. I'm now going to invite our expert panelist, Lee Robbins, Enforcement and Service Manager at Companies House, to answer a couple of the top ones. So if Lee would like to join us, I shall ask a couple of questions that we've had coming in. So good morning, Lee.
Good morning.
Right, okay, so let's see what we've had in. Okay, this is quite an interesting one. What does a good quality discrepancy report look like, or rather, what might make the report invalid?
Okay, so you've touched on this a little bit during the contents of the webinar, but just to sort of make it clear, we're most interested in factual discrepancies. So if, for example, the PSC records of Companies House indicates that a company doesn't have a PSC, or if, for example, Lee Robbins is shown as the PSC, but as part of the onboarding process, the obliged entity reveals that the PSC is somebody else, then that is a sort of something of really high importance, and getting that sort of information across the Companies House is really valuable. There are sort of lower level, more technical discrepancies where perhaps the level of the natures of control may be slightly wrong, or an address may be slightly wrong. But the focus for us, I think, is focusing on where the record is almost, it's where it may be perceived that there's a potential to sort of deceive, if you like, on the public record, so that somebody the company is potentially trying to mislead us. Sometimes it will be down to genuine mistakes, and we will work with the companies to try and correct those. But they are some of the most important ones.
Okay, thanks, Lee. Right, what else have we got here? Okay, yeah. Do we have plans to switch off the old interim service?
Yeah, very much so. The smart survey solution that we used as an interim service has done a good job for us. It allowed us to meet the sort of legislative requirement of having a bespoke service on the 10th of January 2020. But we have all along committed to having a sort of an improved web service, and that's obviously up and running in beta, public beta now, as demo today. And yeah, our intention is that at some point in the next couple of months, we will be closing down the smart survey option altogether. At the moment, there is a sort of a redirection link on there, so I'd encourage all obliged entities to use the new service. There's no need to use the old one, but we will be putting some messages on there to confirm the timescale for when it'll be removed altogether.
Okay, I think that's answered that. Now, I think we covered this slightly in the presentation, but what exactly is a material discrepancy?
Yeah, you're right, and it's a really fundamental question, and it's worth saying that Companies House and have had lots of discussions with colleagues from HMT, Treasury, and from BEIS over the last year or so, in terms of trying to get to the bottom, I suppose, of what a material discrepancy is. So there is some work going on which we're hoping to make it a lot more defined. So whether that comes out in guidance or in another way, we're really keen to sort of learn, I think, from the experiences of the reports that have been submitted over the last 2 years, and to sort of really sort of spell out what a material discrepancy is. At the moment, there's a fair bit of discretion, which it would be helpful for everybody, I think, if we were able to be a bit clearer on that point. So watch this space on that one.
Okay, thanks, Lee. I think this is sort of linked to this one. Are there plans for wider discrepancy reporting in the future?
Yeah, good question, Gary. I'm sure lots of people on the webinar this morning will be familiar with the Economic Crime Bill, sort of Part 2. Economic Crime Act received royal assent a few weeks ago in terms of the register of overseas entities, but the next instalment will bring in much more widespread changes in terms of legislative changes, and potentially changing the role, very significantly, of Companies House. So having wider discrepancy reporting is very much part of that vision. So at the moment it's very narrow and it's only around the PSC information, but in the future there could well be a requirement to tell us about other discrepancies that appear on the register, whether that's directors' details or information in accounts, for example. So yes, there's definitely very much on the horizon wider discrepancy reporting.
Brilliant. Okay, I think we've got time for a couple more, so let me take a couple here. I don't know if you want to do this one, but it's can you explain the process from the Companies House perspective after an obliged entity submits a discrepancy?
Yeah, in sort of high level terms, just to give you a feel for the process. So as things stand in the legislation, it's the obliged entity's responsibility to notify us of a discrepancy, and then Companies House's responsibility to investigate. So hopefully the information we've had will be sufficient to allow us to start an investigation. Occasionally we will need to go back to the obliged entity for clarification, but we're hoping that the system has been designed in such a way that doesn't happen so often. And then initially, depending on the sort of status of that initial discrepancy report, more often than not, we will engage with the company. We won't tell them that we've had a discrepancy report, but we will engage with them to point out that we believe the PSC information is incorrect, and we will try and work with the company to get corrected filings to bring the records up to date. There is a process there, and there are some offences that underpin some of that. So if the company doesn't respond, or if they don't bring in the up-to-date information, then we have some options about potentially escalating a case for prosecution with our prosecution partners in the Insolvency Service. We also have some powers within the money laundering regulations around discrepancy reporting, which allows us the option of removing incorrect information if we believe that's the best course of action. So for example, if we had a report that information was incorrect, and we hadn't been able to get the company to update the records, then it would be an option for us to simply remove the incorrect information and to annotate the records to say why we had done so. So there's a number of options, but ultimately we want the records to be correct and up to date. So that's what we're aiming for.
Brilliant, thanks, Lee. Okay, the last one I think we can take. Will there be any statistics released detailing any reports made in due course?
Yes. So I think high-level statistics are going to be something that we will work with our sort of statistical colleagues on in Companies House to see whether it gets included in some of the official statistics that Companies House regularly give out. But also what we also want to do is particularly to work with supervisors of the MLR regulated firms. There is going to be, or there is a proposed change in the upcoming proposals for changes to the money laundering regulations, which will allow us to more readily share information with supervisors. So in terms of HMRC, the FCA, and all the professional body supervisors, there will potentially be a sharing gateway where we can share statistics and intelligence and other information. That isn't in place at the moment, but we're hopeful that when the money laundering regulations are updated later in the year, that will hopefully be in there and will give us some more options.
Okay, that's great. Thanks, Lee. I think that's all the time we have today. Thank you very much for everyone who's joined us today. We'll leave the question box there just for a few minutes to answer the last few questions. But if we don't get around to your question today, we will get back to you directly in the next day or so via email. Now, please remember, we will send you a link to the recording of this webinar in the next day or so, and it will also be made available on our YouTube channel in due course. And so you can share it then with further people, colleagues and networks or members as you wish. Please make sure you download the handout before we end today, and that's in the toolbox, so just download that handout, please. And if you are watching this again and you want the handout, just send me an email at webinars@companieshouse.gov.uk and I'll make sure I send that handout out to you. So really, thank you very much for joining us. And as I say, we'll leave the question box open just for a couple of minutes while we answer those last few questions. So very much thank you, and we'll hopefully see you on the next webinar.